So, welcome everybody to today's presentation. My name is Peter Yusuf, Senior Market Analyst at IronFX. We are going to be mixing technicals with fundamentals today, as usual. And on the technical side, we are going to be using practically daily charts. We're going to go through majors, possibly also some stock markets, oil and gold. I'm going to be attempting a recalibration of the pairs. And at this point, it would be interesting to note that should you have any trading instruments you would like to have a look at, discuss them, feel free to comment on the chat box. And if we have time today, why not? If not, we can always make time tomorrow. That's no issue. Starting with Euro USD, as we have mentioned, this is the daily chart. I'm going to be definitely recalibrating. The price action seems to be rotating around the S1 1.1070. In my opinion, I see a corridor here, and it's something like this, and this goes lower. And also, let's recalibrate the S2. See this peak here, it was tested once again and again. I think that's more valid. It could go even lower to this level. Also quite interesting because you had peaks here, troughs here, more peaks here. And to the downside, I'm going to be using this sideways motion where we had one trough. This trough was also tested here, it was tested here, it was tested. So these two feel to be pretty valid. Let's have a look at the upside. And to do that, we are going to be unlocking the chart, going back. We have a very beautiful peak right here, but that's pretty narrow. I'm going further back. So we had a sideways motion. This here and this here. Now that's pretty wide, but I don't care. We're talking about practically the validity in the troughs and the peaks. The next one could be up here. Okay, let's readjust the chart. Let's correct the labels. Starting with the R3 at 1.1380. At the same time, let's also correct labels. The R2 being set at 1.12. The R1 at 1.1120. Locking in the resistance levels, let's have a look at support. Starting with the S1 at 1.1025. The S2 at 1.0915. And the S3 at 1.0790. Okay, we forgot to actually correct also the label of the S2. And Let's log everything in. Now we tend to maintain a bias for a sideways motion, and that's between the the R1 and the S1. Could be a little bit wider. On the other hand, I would be noting two elements which tend to support a sideways movement bias on a technical level for Euro USD, and the first would be the fact that the RSI indicator corrected lower, reaching the reading of 50, implying a rather indecisive market. At the same time, I would be noting that the Bollinger Bands have narrowed, implying less volatility, which could exactly allow the sideways motion to be maintained. For a bearish outlook, I would require a lower true than this one. So the price action has to breach the S1 1.1025 and start aiming actively for the 1.0915. Sorry. There you go. To the upside, now there has been some debate. Personally, I feel that the bulls would make their presence felt once the pair has breached the R1 1.1120. Boys at research tended to be a little bit more demanding for a bullish outlook. They would be requiring the pair to rise, breach the R1 1.1120, and actually breach also the R2 1.12, which had a peak right here. Both being plausible. For the time being, I note that the 20 moving average, the 50, and the 100 moving averages are all pointing upwards, which could imply some bullish movement. Yet, in my opinion, that's more like a late reaction of the moving averages. They just haven't been able to reflect the relative stabilization of the past price action between the R1 and the S1. On a fundamental level, we highlight ECB's interest rate decision. It's on Thursday. And should the bank actually cut rates as expected and at the same time imply that more rate cuts are to come, possibly in the next meeting, we may see the euro falling. The main reason I'm highlighting this is because, the market has already priced in 97% by 97%, which is practically an open and shut case for the interest rate part of the decision. So most probably a rate cut is coming. HICP rates have eased. ECB policymakers are stressing the need to actually lower interest rates. The big question is not so much about the rate cut, a possible rate cut, in the Thursday meeting, but in the next meeting. Now, the market seems to be expecting that the bank will remain on hold in the next meeting. Should the ECB actually signal that another rate cut is coming in the next meeting, then we may be talking about a substantial weakening of the euro, as the market will have to reposition itself. That's, in my opinion, the main issue. And at this point, I would be also highlighting ECB President Lagarde's press conference. I think it's half an hour later. And I'm highlighting this because the ECB president has proven to be able to reverse the market sentiment a number of times. And hence, we expect volatility for euro pairs to remain elevated at that period as well. So it's not like the interest rate decision is out. We see possible rate cut, read the forward guidance, and that's it. No. You still have to watch out for ECB President Lagarde's press conference. We may see a reversal there or an intensification. On the USD side of the pair, Okay, we had a drop of Euro USD on Friday, which was maintained during today's Asian session and early European session. We had the release of the US employment report for August on Friday. Now, the release as such, in my opinion, may have been a bit mixed. On the one hand, we had that a tightening of the US employment market in August if compared to July. And I'm saying this because the NFP figure rose. By the way, July's NFP figure was revised downwards substantially from 114K to 89K, and August's figure was at 142K. The unemployment rate ticked down from 4.3 to 4.2, and the average earnings growth rate accelerated slightly. If I'm correct, it was from 3.7 to 3.8% year on year. So a tightening during August did occur. That's one. On the other hand, though, we have to note that the NFP figure rose, but not as much as the market expected. The market's expectations, or if you prefer, the forecasts, which were set by economists, were talking about the figure reaching 160K. It did not. And it was characteristic that at the time of the release, USD pairs the USD tended to weaken. And that happened across the board. You can see it. And as we're at it, let's have a look at the minute chart to see the market reaction to the time of the release on Euro USD. This is the minute chart. And we're entering now Friday. This was it. Note how Euro USD was on the rise, signaling the weakening of the USD side of the pair at the time of the release, and it rose about 70 pips. That was something which was caused practically by the fact that the NFP figure did not reach what was expected, did not rise as much as expected. But later on, the tightening of the US employment market, I think, became more felt and allowed for the pair to drop lower. Note, we are always in the min chart, note this wide drop here, which happened practically during today's European session as the European stock markets and European traders came into force. Locking it in, back to the daily chart. Once again, for the time being, we tend to maintain a bias for the sideways motion between the R1 and the S1 to be maintained. And for a change of trend, I would require practically either a breach of the R1 or a breach of the S1. Let's have a look at USDJPY. Now, USDJPY, this is the daily chart, edged lower on Friday and recovered the lost ground today during the Asian session. Let's have a look how the market reaction was here at the time of the release of the US employment report for August. We can see a wide drop of around 180 pips, 90 pips. Something which was maintained throughout the day on Friday. Back to the daily chart, yet the losses were recovered and the price action of the pair has reached the 143.45 support line once again. It's slightly below it, but I'm keeping the level and making no change in support and resistance lines. For the time being, it seems if we drill into the 1-hour chart for more detail, it would look like the downward motion of the pair, which was initiated on the 3rd of September. Now it was interrupted. And that's very clear during the late American session on Friday and during the early Asian session today. So we switched the bearish outlook in favor of a possibly sideways movement. Note how the price action is peaking just above the 143.45 support line. Resistance line now turned to support. Back to the daily chart. The RSI indicator dropped as low as almost the reading of 30. It came as low as 32 and is now correcting higher, which is supported also by the upward movement in the price action. I would expect the pair to rise above the S143.45, yet remain in the spectrum between the R1 and the S1 in a sideways motion like it was here. On the other hand, should the pair fail to clearly break above the S1, then we may be seeing the pair hitting a floor at the 143.45, the level turning from support to resistance. And in that case, I think we will be having a shift of the downward trend line to the right and allow for the bearish outlook to be maintained. It's going to be interesting to see how the American Open will affect the pair's direction. Let's have a look at GBP/USD. GBP/USD at this point is falling. It breached on Friday the 1.3140 support line, now turned to resistance. Let's turn it. Let's correct the labels as well. And at this point, I'm going to be deleting this level and allowing for a wide sideways motion, which could be narrowed here at 1.3075. Now, pound traders have an interesting week ahead. We have, if I'm correct, the UK employment data for July and some data for August tomorrow. I would be noting here that we also get the UK GDP rates, industrial output and manufacturing rates, which could be also of interest for pound traders. And if I'm correct, that should be on Thursday. A possible tightening of the UK employment market, as forecasted, could actually provide some support for the pound. Okay, and we're correcting those levels. Yet, we note the downward motion of the pair on Friday and during today's Asian and European session. But for the time being, I maintain a bias for the sideways motion between the S1 and the R1 to be maintained. I note to that end that once again, like with the euro, we have an easing of volatility, which is characterized by narrowing of the Bollinger Bands. And at the same time, please note how the RSI indicator is nearing the reading of 50, which on the one hand, from the upside, which on the one hand tends to highlight the easing or fading away of any bullish tendencies, but at the same time does not actually corroborate for a bearish tendency among market participants for the pound. On the flip side, I would say, on the contrary, I would say that the fact that the RSI indicator has been nearing the reading of 50 without breaking it tends to imply a relative indecisiveness on behalf of the market to actually breach the support lines and move decisively lower, at least for the time being. Now, on the USD side of the pair, we already discussed the implications for the market, at least the FX market for USD pairs, of the US employment report for August as we analyzed Euro USD. But I would like to make a note also of the release of the US CPI rates for August. They are due this week. And in my opinion, it's the next big test for the USD. Should the rates show an easing of inflationary pressures, and I would like that to be unanimous both on a core and headline level, then we may see practically the market's expectations for the Fed to continue cutting rates being intensified. So to start cutting rates being intensified, and that could weigh on the USD, allowing for GBP USD to rise. On the flip side, should the rates actually fail to slow down, implying a persistence of inflationary pressures within the US economy, we may see the USD getting some support. And even if they accelerate, we may see that support being substantial, maybe even asymmetric. Okay, so for the time being, we tend to maintain a bias for the sideways motion between the R1 and the S1 to be maintained. For a bullish outlook, I would require the pair to breach the R1 1.3260, practically delivering a higher peak than this one. While on the flip side, for a bearish outlook, I would require the pair to breach the 1.3075 and start clearly actively aiming for the 1.2890. Let's have a look at USD CAD. Now, USD CAD was a very, very interesting pair on Friday. And the reason I'm highlighting this pair on Friday was because practically we had at the same time the release of the US and the Canadian employment data for the same month for August. Market-wise, the loser was definitely the CAD, and that's understandable, as practically we had some mixed signals from the Canadian employment market. Let's have a look at the market reaction at the time of the release of the two reports. Unlocking the chart, back to the minute chart, opening it. Let's go back. We're entering Friday right now. Here it is. We are talking about 38 pips distance. So practically the market reaction used the CAD from the simultaneous release of the US and Canadian employment data for August was somewhat muted. It wasn't the big market reaction which we saw on Euro and GBP. It was very interesting. But overall USD CAD lost ground, which was more of a result of the USD gaining. Nevertheless, the pair was unable to reach or put to the test the first resistance line, which would be the 1.3590. So we tend to maintain a bias for the sideways motion to continue. Also note that The upward movement for today, up until now at least, was unable to form a higher peak. So practically, we're talking about a possible stabilization of the pair, in my opinion. Yet once again, the American Open, where we have also Canadian and US traders coming into play, will be interesting here. The RSI indicator has neared the reading of 50, also implying relative indecisiveness on behalf of the market to actually push the pair to either up or down directions. All of that tends to imply a relative stabilization once again, and I would expect the sideways motion between the R1 and the S1 to be breached, to be maintained. For a bullish outlook, I would require the R1 1.3590 to be breached, and the pair to start actively aiming for the 1.3720. On the flip side, for the bears to take over, the pair has to fall. Not only to fall, it has to drop below the S1 1.3475 and start actively aiming for the 1.3340, which, even should the bears take over, may take a couple of days, even more. Let's have a look at the Aussie. AUD USD had a decisive drop lower, breaching the S1 0.6710, a level which now has to be turned into resistance line. Let's go hunting for a new ultimate support level. I think this true here is very characteristic. However, this true is also very good one. But we had a wider drop here. Okay. Let's reposition the labels. The S3 in green is going to be set at 0.6350. The S2 at 0.6465. The S1 at 0.6575. The R1 at 0.6710. The R2 at 0.6795. And the R3, which is based practically on this peak right here, at 0.6870. Now, AUD USD has a special interest this week. We have low, if any, high impact financial releases from Australia this week. Nevertheless, I would be noting on a more macroeconomic rather than trading application the release of the business confidence and conditions, therefore July and for August, and at the same time the release, that's for July, and at the same time the release of the Australian consumer confidence for August. In my opinion, the Aussie may be led mostly by China. And I'm highlighting this because we're getting China's trade data. Aussie traders probably will have their eyes fixed on the China's import growth rate, given that a wide amount of raw materials is being exported from Australia to China. And definitely the fact that Chinese factories are struggling to keep economic activity afloat is not boding too well for the Aussie. So a possible acceleration of the import growth rate of China could provide some support for the Aussie as well. And I would be noting also fundamentals. So we have, given the close economic ties between China and Australia, any escalation on the US-China relationships or the Sino-Australian relationships could weigh on those. On the flip side, any thawing of tensions, given also that the US has already sent out one delegation to China, which was headed by Jake Sullivan, and is sending another one. This time it's going to be more about military. Should we see an easing of the tensions in the relationships between the US and China, we may see the Aussie getting some support here. And let's not forget at the same time that the Aussie is a commodity currency, like is, say, for example, the Kiwi or the Canadian dollar, the loonie. And those currencies are very, very sensitive to market sentiment. And should we see an improved market sentiment besides China, that could provide some support for the Aussie, the loonie, and the Kiwi in the current week. On the flip side, any intensified cautious approach by the market could weigh on AUD, CAD, and NZD. And in our case, AUD USD, such a cautious sentiment could actually drive AUD USD lower, far lower. We tend to maintain a bearish outlook for the pair, and we're basing that on the intense downward motion of Friday, which tends to highlight more or less the downward motion. And at this point, it would be interesting to note that the intense downward motion shows a downward divergence of the price action in relation to the downward movement, or downward trend line to be more exact. Also, the fact that the RSI indicator has broken below the reading of 50 just slightly, but it's pointing downwards, could imply that a bearish sentiment is being built up among market participants for the pair. Should the bears maintain control over AUD/USD, I wouldn't be surprised to see the pair aiming, if not breaching the S1 0.6575. On the flip side, should the bulls take over, I would expect the price action to reverse direction, breach the R1 0.6710, and aim, if not breach, the R2 0.6795. Let's have a look at commodities, and I would be starting with WTI. No, I would be starting with XAU/USD gold. Daily chart, downward motion on Friday reflecting the strengthening of the USD. Some further losses during today's Asian and early European movement, but the price action of gold remains stable between the S1 2470 and the R1 2530. We tend to maintain our bias for the sideways motion to continue, given also the fact that the Bollinger Bands are narrowing, once again highlighting the lowering of volatility for the precious metal, which could allow the sideways motion to be maintained. But also I'm highlighting the fact that the price action of the RSI indicator has neared and leveled just above the reading of 50. It's actually at 54.55, which should imply a rather indecisive market for the pair. Let's have a look at WTI. That was a good job. So practically the downward motion of WTI's price was maintained. Definitely it has breached the 67.90 support line, and now this turns into a resistance line. At this point, I would like to see the validity of the level as a resistance line. Let's drill into the 1-hour chart for more detail. And we can see how the level was tested. The commodities price tried to breach clearly above it. It wasn't able to. Back to the daily chart. Let's go hunting for a new ultimate support line. Unlocking it, going back. I'm taking this peak here. 54 in green. Let's see how it sits. And it sits perfectly. Okay, let's readjust the levels. You can see how the wide sideways motion in the midst of August practically forced us to maintain this width between the R2 and the R3. Let's correct the label, starting with the S3 at 54. For the time being, we tend to maintain a bias for the downward motion to continue. So the bears have it here. And I'm highlighting this because it's not only the downward motion of Friday, but also the fact that the RSI indicator is at the reading of 30 almost, it's just above it, which tends to highlight the bearish predisposition of the market for the commodities price. Next possible target for the bears is set at 64.10. Now we're turning to the resistance line. The first resistance line is being set at 67.90. The second resistance line at 71.40. And the third resistance line at 78.75. At some point we will have to recalibrate this. Anyways, for the fundamental level for oil prices, I would be highlighting practically three factors. The first factor would be OPEC's production levels. Should we see any indications that OPEC is about to ease on its production quotas, which are keeping oil production at low levels on a global level technically, that could allow for oil prices to drop even further, as that would imply practically an enhancement of oil supply in the global market. That's one. The second would be China's demand. Should we see indications that the Chinese demand is easing, once again, that could have bearish implications for WTI's price. I would also have a look at the US oil market, and should we see a tightening of the US oil market, especially with AP's weekly crude oil inventories report on Tuesday and the EIA weekly crude oil inventories figure on Wednesday, then we may see the bears getting clipped. The last factor I would be also keeping an eye out would be for an intensification of tensions in North Africa and the Middle East, special focus being set on Israel-Palestine. It's a very, very heated area, and it's crucial, absolutely crucial for oil prices, especially given that Libya is an oil-producing economy, but we have all around Israel other oil-producing economies such as Iran and Saudi Arabia, and that could play a key role, in my opinion, regarding the international market's predisposition. A possible flaring up of tensions could actually provide support for oil prices, while on the flip side, Say, for example, if we see an easing of market words, say, for example, if Israel and Palestine are nearing a possible ceasefire, and I'm highlighting this ceasefire, not a solution, then we may see oil prices weakening somewhat as market words, as we have mentioned, will have started to ease. That should sum it up for the day from all of us here at IronFX. Best wishes for solid trading.
Okay, hi everyone. Welcome to today's webinar. So before we get started, I'm gonna give about 2 more minutes to let more people join our session before we get started. In the meantime, let me know if you can hear me and see me in the chat. And yeah, I'll see you guys in about 2 more minutes. You can see more people coming in. So yeah, we'll start in about 2 more minutes. Thanks everyone. Okay, I forgot to start my recording earlier. Okay, no worries. So it shows strong recent bearish divergence versus the RSI. So that's the main point. But lastly, you can see that we have a combination of the RSI breakout of the ascending trend line. Secondly, we have a bearish divergence. And lastly, we have price itself breaking out of the ascending trend line. So that all gives us a really high probability that price is going to continue to break out of the ascending trend line and move in a downtrend. And you can see that's exactly what happened. Price broke and dropped strongly. Okay. Okay, we have another example here. So you can see we really have a lot of examples to go through today. But basically, in this example, both prices are moving in a descending trend line. RSI is breaking out of the trend line. Okay, and then subsequently, we can see that there is a bullish divergence. Price is making a lower low. RSI is making a higher low. Okay, so that's a bullish divergence. And currently, price is testing the descending resistance line, and we're wondering if it's going to break out of it. So with all 3 points, firstly, it's testing the line. Secondly, we have this RSI breakout of the descending trend line. And lastly, we have a bullish divergence as well. Okay, and that all shows a successful breakout of descending resistance line as forecasted by our RSI. Okay, any questions so far? Okay, all good. Now let's look at some GIFs that um show us how a bullish divergence works. So if we take a look at the image first, price is moving in a descending trend line. And we can see, so the first thing is we see price moving in a descending trend line. Second thing is we see we have a bullish divergence on our stochastic. So price is making a lower low and our stochastic is making a higher low. So that's the second thing. And lastly, we have our resistance level at the swing high, which is in line with our 100% Fibonacci projection. Okay, and then if you look at our GIF, you can see what happened after that was that price subsequently broke out of the ascending trend, descending trend channel, and moved upwards, testing that resistance level very strongly and reacted off of it multiple times. If you're wondering what resistance level I'm talking about the 1.56099 level. Okay, now let's look at another example. Here is more straightforward. We just have price moving in a bullish divergence with price making a lower low and stochastic making a higher low. And subsequently, after that, we also see price moving upwards. And in fact, it actually moved above our Ichimoku cloud as well, which suggests a bullish signal. Okay, do you guys have any other questions? If not, let me just pull up my charts and we can look at a couple of charts together and see if we have any support or hidden support resistance levels or any divergences. Okay, if you guys have any charts you'd like me to go through, let me know in the chat as well. Okay, let's look at um by looking at AUD maybe. Okay. Okay, so on our weekly time frame, prices are moving in this descending trend line. Okay, so again, what makes a valid trend line is if there are at least 3 touches, which you can see here, we do have that. And then let's go in with on a daily time frame to go in with our support and resistance levels. So I'm gonna see if I can identify any trends first, but here we see prices kind of ranging. Okay, so firstly, I'm gonna place my pivot over here. Okay, I'm gonna label this as an intermediate resistance. Okay, and then my first resistance, I'm just gonna place it up here. Okay, and then for my first support, I'm gonna place it at this double swing low. Mm, okay, and I try and pull it back as far as I can without cutting too many bodies of candlesticks. Yeah. So for example, over here, I would not place it here because of this area here that cuts a lot of candlesticks. So if you're just cutting the wick like we are doing here, that's perfectly fine. Okay, now let's go in with our Fibonacci levels. So I'm gonna go in with a retracement and I see my 61.8 line up with my first support. Next I'm going in with a projection. Don't think. Okay, 61.8 lines up nicely. And over here, I think we have another extension. Yeah. So for extensions, we use 127 and 161.8, and we are using a Nike tick kind of shape. So if you can identify this kind of pattern, then you can use this 127 and 161.8. Okay. Uh, Again, these Fibonacci levels don't have to line up exactly at the level. As long as it's kind of near that level, that's good enough. Okay, so let me just highlight this level here because we have a confluence area, which is basically when two or more Fibonacci levels line up in the same area. Then you can see my 61.8 also lines up with that area. And my 50% actually as well. So I'm just going to keep those two. Okay. So here we're definitely going to expect to see some resistance in this area here. Now let's pull out our indicators. I like to start off with Ichimoku and MACD because at one glance you can see exactly what these signals are. So for Ichimoku, price is currently moving in the cloud, so we can't really say much except that the trend is probably changing. So we see price was moving below the cloud before, which is a bearish signal. Now that it's moving within the cloud, we might see prices move in an upward momentum instead, but we can only confirm that once price has moved above the cloud. So I'm going to remove that for now. And our MACD is also giving us a bullish signal. Okay, so that supports our analysis. Let's look at stochastic first. Okay, if we go back to my slides, we typically look at 533 as our settings. So let's use that. Okay. Um, okay, let's see if we have any divergences. Over here, I can see that we do have a hidden support. So this is the tool that I was talking about earlier. Basically, okay, I'm gonna hide my MACD first. Okay, so basically when price is making a higher high like we see here, okay, just a second. I might change this back to 21. Okay, reason being my time frame is daily time frame. Um, here. So between these 2 points, right, price has made a lower low, slightly lower low, or rather, price is making the price is moving in this first support, okay? Whereas over here on our stochastic, we can see a very sharp difference. Price is definitely making a lower low. Okay, so this could suggest that price is going to continue to drop down here. Okay. So even though the default settings are normally 533, you can adjust it according to the time frame that you're using and according to like what works best for your chart and your trading strategy. Nothing is ever, set in stone. It's really dependent on what charts you're using. So yeah, feel free to adjust it accordingly. Okay. I guess another example we can see if we can find more divergences just from this chart alone. Okay, price is making a lower low here, and here it's making a slightly higher low. You can see immediately after this, if we replay it, okay, you can see price proceeded to move in an uptrend after that. Okay, that's a pretty small example, but yeah. Okay. Any requests for any charts that you guys would like to see, or any examples you want me to go through? Mm, oh, we can take a look at stochastic as well. Okay, so we're looking at stochastic now. Let's look at RSI. Mm, Can I add more examples on the chart? You mean do more of these divergence examples? Identify more divergences? For example, over here we have a hidden support. Okay, whereas on our price, it's making a lower low. Okay, and the tool that we're using is this, just the horizontal line. So it makes it really easy for you to identify whether it's a support or if it's a divergence. Okay, a very simple one to identify is over here. Okay, so you can see price making a lower low and our RSI making a higher low. Okay, you can see after that price proceeded to after this divergence, price proceeded to shoot upwards. Okay. Yeah. So yeah, that's on the RSI. Um, okay, another one here. Price making a lower low. Okay, and then RSI making a higher low. Okay. So then you see price also shot up after that. Okay, shall we look at another chart? Okay, let's just focus on looking for divergences, I guess. RSI, stochastic. Let's focus on RSI first. So on our RSI, you can see price moving in this support level. Okay, but then you can highlight the points that you're looking at as well to make things easier. And price is making a higher low, whereas here we have a hidden support. Okay, after that you see price shoot up as well. Another example over here. Price making a higher low, sorry. And here price is making a lower low. Okay, so this is a bearish divergence. Okay, hidden resistance. Now maybe we take a look at that. Over here, you have a hidden resistance level from between this point to this point here, right? We can definitely see that price was making higher highs. Okay, so we also see subsequently price proceeded to drop, reverse off of this resistance level. Okay. Okay, any other questions? Anything you guys want me to go through? Any charts you want me to take a look at? Okay, if not, then that's all I have for you guys today. Thank you guys so much for joining me. I'll stick around if you guys have any other questions. But if not, that's all for today. Thank you guys so much for joining me. I hope you guys found this helpful, and I'll see you guys again next week. Thanks, everyone. Bye. Have a great rest of your week. Thanks, everyone. Yep, take a look at euro dollar. Sure. Do you want to just take a look at the divergences, or you want me to do a analysis? Yep, we can do both. Okay, so on our daily time frame, we have this as our first resistance, and then my pivot, right? And then lastly, my first support just here. Okay. Um, yeah, so then I'm going in with a projection. Okay, my 61.8 lines up nicely. Going with retracement, my 50% lines up. Mm, I think my retracement here also lines up. Okay. Um, so here we have, oh, not really. Okay, I think that's all the levels we have. So then we pull out our indicators, Ichimoku MACD. Okay, price is moving within the cloud, so we can't use that. MACD is moving, ascending in a bullish signal, sorry. So if we look at stochastic, um, okay, here price is kind of moving upwards, right? Making a higher low. Mm, okay. Here it's kind of it's not really a support level, kind of making a lower low here. Okay, you can see from the dotted line that it's not horizontal, right? So it is slightly um moving in a downtrend, or rather making a lower low. Okay, so it is a bit bearish, so we might continue to see it move down. Okay, similarly for our resistance, here we have a hidden resistance level. Okay, and then we see price moving in, making a lower high. So That might actually be better than this. Yep. So this is a bearish divergence as well. Okay. Yep, no worries. Okay. Yep, if there's nothing else, uh, that's all for today. Thanks everyone. Bye.